probateexpert.com, and I have an interview series where I look for local business leaders and resources for those of us in real estate and in probate. And today I'm really excited to have a friend as well as a vendor that I work with regularly, Michael Wander. So Michael, say hi.
Hi, everybody. Michael Wander here. Nice to be here, Bill. Thanks for
Yeah,
having me.
wandercpa.com, is that right?
Sir, you got it.
Good. So give us a little background. I know you're not from the LA area. Where are you from originally?
So originally grew up overseas, spent some time overseas, and came to Seattle, Washington for high school, Los Angeles for junior high. Went from Seattle, moved around again, did my undergraduate in Seattle, my master's in New York, and a few places here and there in between. I moved out here to California back in 2014, and yep, here I am.
Married
Yes, exactly.
and
Married,
two kids?
four little kids. Yeah,
Whew, busy. You have a
9-year-old.
lot. Go ahead.
I have a 9-year-old girl, two boys, 7 and 4, and 1-year-old little girl.
Oh my gosh.
So
You're busy. Your wife's busy.
she's very busy. Yes, life's not dull.
And so your practice, you own your practice here in Los Angeles area, and you're located on Robinson Boulevard in Beverly Hills, or Los Angeles, technically
So the
speaking.
address is in Los Angeles. We're adjacent to Beverly Hills, and we are, yes, right here on Robertson Boulevard, right near the Pico Robertson neighborhood.
Yeah.
In here, well, opened up my practice full time about actually 2 years ago on August 1st, exactly 2 years ago.
Right.
So prior to that, I was working as an employee, and for a portion of that employee time period, I had started building up a small practice. And then 2 years ago, I just dove full in, and now we're here. So exciting, a lot of fun stuff happening.
So I met you right when you started that. I think I met you like the month before you left and launched the business. So talk a little bit about what prompted you to make the decision to leave, employment and to go into owning your own practice.
Great question, Bill. And I love thinking about it and talking about it too. But it's really, I think I had some sort of entrepreneurial vision or dreams for a long time, and I think like a lot of people do. I used to be a photographer, and so I was working as a photographer, doing small events, sometimes medium-sized events, portraiture for fun, and making a little bit of money that way. So that was kind of my taste with entrepreneurialism. But then I went into accounting, and I was working for a public accounting firm, and then I was working for a bank after that. And while I enjoyed many aspects of being an employee or just of the organizations that I was working for, in terms of specifically opportunity, growth opportunity within, as well as just the ambiance and the hustle and the bustle and the different people you can connect with and network with. Those aspects of one of the organizations specifically, I really enjoyed. However, when I was working for the bank, I had a little bit of time to do some thinking. So public accounting is very different than working for private accounting or internal accounting, as we call it. So the hours were not as crazy at the bank as they were in public accounting. Public accounting can be 12 plus hours a day during busy season. The bank was regular 8 to 5, 9 to 6 type of job. So I had a little bit of extra time. So I started thinking about working a little bit for having some of my own clients on the side. People occasionally would come to me, talk to me, being a CPA, and ask me to advise them or help them out with certain tax questions. And so I slowly started building up a small little clientele. And I found out that when I was at the bank, I was really just thinking about wanting to be doing work for the clients. Now, one of the main reasons is because when you work for a large organization, I am one out of a few thousand people.
Right.
And the impact that I felt like I was having on the bank as a whole, and specifically on the bank's customers, was minimal. It's very difficult to really feel the impact that we're making on a daily basis. However, I realized that with the small clients that I was working with, any time that I could spend on their work, I was creating a tremendous difference in their business and in their lives. So for me, it was just a matter of job satisfaction, of feeling like I was having an impact. And then I went through a few months, a period of like, should I? Yes, should I not? It's not secure. There's no guaranteed paycheck. There's so many questions and ifs and what if you don't make it? What if you don't succeed? What if clients leave? There's so many worries and concerns and then I just got to a point where I was like, it doesn't matter. I live once. Like, if I'm ever gonna go work for myself, I'm ever gonna open a practice, it's not gonna happen unless I make it happen, unless I do it. So what's the worst that's gonna happen? Is you're gonna fail. Okay, then go find something else and do something else. But like, what does failure even look like? I don't even know what failure like. Just even entertaining the thought of failing, it means that you've basically just given up, I feel. So, I guess clients come, clients go, right? But unless somebody gives up, like really there's no end, there's no failure, there's no definitive failure that occurs. So I was just excited. And, it was, I remember that moment, I hit the enter button, sent that email to my supervisor, and then I think it was 2 weeks later, I was out there walking to my car, dropped the keys off, the badge off, and I was just walking to the car, and I was just like, wow, like, what am I going to do now? I'm free. What am I going to do? And I knew, like, within like 2 minutes, I knew exactly what I was going to do. Maybe it was 5 minutes. I knew exactly what I was going to do. Didn't know exactly what the end product was going to look like. Still don't know, but I knew exactly what my next steps were. Just go and hustle and grind and just go out there and just connect with people and just educate myself. So that's kind of what I've been doing for the past 2 years.
Now, and I've watched this, so this is all, for the rest of watching, this is true. This is my experience of it, watching it from the outside too. So one of the things that keep us engaged together is that that you and I both are fans of, or practitioners, or students of, I guess, 10X, Grant Cardone. So where does that fit into you as far as your business, your mindset? How does that play for you in your business?
So I was actually introduced to Grant Cardone through one of his, through a different YouTuber that basically on real estate, he was saying not everybody's Grant Cardone. So, and he was basically saying that people should invest in, maybe single family residences as opposed to multifamily residences, given their means. So, but I looked up Grant Cardone and I really got hooked right away on just his message, and specifically his vulnerability, his openness, and how open he is. He's a hustler. Don't get it wrong, right? He's a big time, mover and shaker and hustler. But he's also very sincere, I feel, and I believe from in what he does in many, many ways. And so I just really resonate with just the idea of aiming big and not being afraid of failure. And so I kind of had been watching him for a while and doing a few of his trainings and seminars and online. And so it just, and a lot of his lessons and themes, I think, I still think about on a regular basis. And I try to implement them specifically, and I try to do it in a way that fits with me and my personality and different things that are unique about me. But yeah, definitely he's in that movement. I still connect with a lot of people online about it. It's I guess it's a movement. It's a mentality of people that are really just dedicated to providing way more value than what we initially would feel like we're capable of doing.
Yeah, very good. So if you would indulge me a bit, because I work in real estate and I work with real estate agents, investors, wholesalers, investors all the time, I kind of have some kind of more CPA-ish questions, less personal, but more related to your expertise. If you don't mind, I'll ask. And if you're not comfortable answering any, say that. And obviously for everybody listening, this isn't financial advice for you or CPA advice for you. This is just, I'm asking you to answer these questions more in a general sense, okay? So let's start with that. So number one would be, if somebody's a new investor, I get this one a lot. I'm a new investor. Do I need to go out and create an LLC? Do I need to create a corporation if I'm a new investor and I have no assets, but I want to start a business where I'm flipping houses or wholesaling? Or is a corporation really only appropriate when you have assets that you need to protect?
I mean, you have to consider the cost benefit of opening up a separate entity, whether it be an LLC, single member LLC, or a corporation. There are going to be some administrative costs that go along with it, whether it's the time you spend learning about and doing the bookkeeping yourself, as well as filing the compliance paperwork with the regulators, or whether it's paying somebody else to do it. There is a cost involved. And so depending on I would say a person's desire, to learn about that process. Sometimes we want to do something, and I would recommend this if we want to learn about that process. Now, it's going to cost us something in terms of time, but we learn about it. So for us, it's totally worth it. But in terms of, let's say, somebody who's not necessarily, who wants to focus on whatever area they're doing, and they're thinking, should I, let's say they're a doctor, or, they're a W-2 and they're also investing on the side, or whatever the case may be, should they open up an LLC or an S corporation? I would say, you should budget for anywhere between, $2,000 to $4,000 for administrative costs annually for a smallish type of S corp or LLC, including the bookkeeping and including various fees that go to the state, etc. So that's probably a very rough estimate. But so depending on the amount of revenue that you're expecting the business to be bringing in, you could do it as a sole proprietor. But in terms of the legal aspects, right? There's the legal perspective, then there's going to be the tax implications. So tax implications, there's going to be some benefits to having an S corporation, no benefit to having a single member LLC. But as far as legally, there are going to be some protections, as you know, for opening up a separate entity. So if your assets, I really don't feel qualified to answer the question about the value, whether or not, and what value of assets should a person create a separate entity to protect it. I mean, for one person, $100,000 might be, a lot of money that they would want to open up an LLC or an S corp. For another person, they might want to do it once only they have, multiple properties. And here in LA, that's going to be a few million. So, just kind of really, I think really depends on the person and just the person to keep in mind the cost benefit. And so, I usually recommend to my clients that once there's, if there's anything beyond one property, and one property they want to consider it. If there's anything beyond one property, then they don't necessarily have to have a separate entity for every property, but there's definitely something to consider and to maybe get some legal advice around as well.
So, well, thanks. I know it's difficult to see these hypotheticals, and you're in the business of really consulting with people individually and having the background. But I think one of the things I could say with authority, I'm not a CPA, is if you have no assets and you're starting out, there's no reason to incorporate until you have an asset. And you can always put the asset in a corporation. So I get people who are starting out and, well, I can't start buying property till I have an LLC. No, it's the other way around. Buy the property and then put it in the LLC. You can even do it during escrow, but don't hold off getting started. You got to get started. So let's move from LLCs to S and C Corps. I get a lot of real estate agents like myself, brokers, and professionals who flip property and make money and such. How much money should I make as gross income, or let's say net profit, so adjusted gross income, before I should consider getting an S corp to save money on taxes? Not counting the legal side, but just strictly, if I make $50,000 a year, is it worth incorporating 100, 150, 200, 300? At what point does that make sense to say, hey, you can put some income through the corp, instead of paying wages, you'll get dividends, lower tax rate? Where's that break-even point?
So there's always going to be a tax benefit to having an S corporation over an LLC, a single member LLC, if you do not consider the administrative costs that go along, additional costs that go along with having an S corporation. An S corporation is a separate entity. It's a corporation, so there is a separate tax filing for it. Again, shouldn't be more than $1,000 for filing an S corporation tax return. Obviously, it's going to depend on the size of it. But so to the degree, right? So let's say, for example, right, somebody has $100,000 in net income aside from their own salary, right? Let's say under a single member LLC, that $100,000 was going to flow through to their on the personal 1040. So if and this is one of the reasons why it's difficult, as you're mentioning, to give a generality. But basically, if you can understand this, as the income grows of the business, so too is the payroll, the salary that's going to be generally required to be paid to the business owner. Because the IRS has a rule that says the salary paid to the owner has to be, I forget the exact language of it, but it has to be basically fair. So it has to be something comparable to what a different business would pay its CEO. If you're the CEO, you're the sole owner of it. So you can't be in a business making $10 million and pay yourself a measly $35,000 salary, because by paying a lower salary, then you're going to save on the difference between the net income and the salary on self-employment taxes. Let me give you an example without getting too much into the weeds. Let's say a single member LLC had $100,000 in net income. They're going to pay income taxes on that whole $100,000. They're also going to pay self-employment taxes of about 15.75 on self-employment taxes on that whole $100,000 as a single member LLC. If, however, they are an S corporation, then they would pay themselves a salary of, let's say, $40,000, just to throw a number out there. And so then they were going to pay the full income taxes on the full $100,000 still. But that $40,000 will be the only portion that's going to be paying that self-employment tax of 15.65%. And the additional $60,000 is going to be, you're going to save taxes on that amount. It's not going to be paying that self-employment tax on it.
Okay.
So it really depends on the amount. But I would say, right, to answer your question, I know that's kind of a roundabout way. I would say if a business is making $100,000, that's probably a decent time to start thinking about, you probably get some decent savings out of creating the S corporation. If you just do the quick math, $60,000, $40,000 salary on $100,000 net income, it seems reasonable. So $60,000 times, 15%, right? You're going to be saving, like $9,000 or so. So that's a decent savings on those numbers right there. And it's not exaggerated.
And even if you pay $3,000 or $4,000 in corporate returns and bookkeeping and
Right.
Annual fees, you still come out way ahead. And this is really why I asked the question, because I for years didn't understand that break even had nothing to do with legal liability, but has everything to do with taxes, at least for me. And I've overpaid for years not incorporating. And I had people say, "Why don't you incorporate?" I thought, well, yeah, I'll make $3,000-$4,000, this year by the time I'm done with expenses. Well, the first year I made that much, I realized I should have done this years ago, and I really overpaid. And so, wow. Okay, another question I get asked a lot, and I'm not a CPA, so I'm sure they don't ask you this because it sounds kind of fishy, but I'm sure people have asked you as well. We live here in California, which has a very high tax rate. Can you incorporate in another state as a way to avoid paying taxes here in your state? Let's say, for example, California. Can I file a corporate return in Nevada or Florida for the purposes of avoiding paying state taxes in California?
Fortunately not. California loves to tax its residents, and so if you're living in another state, but you have revenue in California, California is going to tax that revenue. If you're living in California and have revenue in a different state, then maybe you're not going to be taxed on that. Actually, I believe you are still going to be taxed on that revenue. Not 100% sure about that. But for sure, if you're living in California and the revenue is in California, for sure you're going to get taxed. It doesn't matter where you are incorporated or where your LLC is established.
I was even told, because I used to live in Florida. My fantasy has moved back to Florida. I was just there last week. I was told that living in California, if I do business in a state with no taxes, like Florida, as long as I live in California, since Florida has no corporate return, no corporate tax rate or personal tax rate, that I would pay taxes in California.
Even on that money over there.
Yes.
And is that specifically because they do not have
Yes.
an income tax? Whereas if it
Yes.
was in the state that did have an income
Yes.
tax, then you wouldn't pay that
Yes.
tax in California?
Yes. Yes. So I do business in another state, like say New York, I would file a New York return, or in Tennessee, maybe has a lower tax rate. I save a little bit. But if in Florida, you're going to pay California rates while you do business in Florida, which is not good. I'm not a CPA, and I can just say for the record, California tax rates, not good. That part I can say with conviction. So let's talk a little bit about your practice. Let's go from kind of general to kind of specific. If I was going to call you up and ask you to help on something, which I have actually. Part of why we're doing this is because I'm not just a friend. We went out for breakfast and met and maintained a relationship, but I'm also a client. I should say referred a client to you, and then I don't know if I'm technically a client or an heir of an estate that's your client, but you're actually handling a family matter that I appreciate. So I've
You
used
hired
you
me.
as
Yes, definitely. I appreciate your
yeah.
appreciate
So
your
I've worked with you as I've referred people to you that I had nothing to do with, and I also I don't know if I'm really the client or related to the client, but anyhow. So let's talk about how you do business yourself as an entity. Because I'm a probate, do you handle trust administration? And I know the answer is yes because you've done it for me and for clients, right? So tell me a little bit about the practice of trust administration.
Sorry, a little bit about the practice. I broke up. I didn't hear the
Of
last.
trust administration. I know you do trust. I had a client that you did. I don't know what you did for them, and I want to break any confidentiality. And then for my family entity, I know you're in the midst of it. So tell me what do you do? What are the services that you provide for a trust? Like for example, I know you're going to do a tax return for one that I'm involved with, right? Do you also there's sometimes bookkeeping required for trusts? Do you do that as well? Do you provide the bookkeeping service or outsource the bookkeeping, or how do you handle that part?
Yeah. So basically, the services that we provide, there's going to be some a decent amount of overlap between the different types of entities or businesses. Obviously, there's going to be some differences when getting down to the nitty gritty about the tax implications and everything. But just to keep it a little bit general right now, as far as the general services that we provide both for trust as well as for other businesses. Yeah, I mean, so a lot of what we do is we just kind of work closely hand in hand with whoever is responsible for whatever the business or the trust or the entity is. And we just try to do whatever it needs to be done and make sure that whatever the responsible party, the owner needs, that they are fully aware of what all of their requirements and obligations are. And then if they want us to handle it, we'll handle it. Sometimes they want to do parts of it themselves. So we just make it our responsibility to let them know, to be fully aware of whatever is required, and be available to do any parts or the whole thereof to help make sure that they're staying compliant and make sure that taxes are being filed timely, and also there's a way to minimize taxes as well, tax planning, projections, and then the bookkeeping. Bookkeeping. I've always felt that bookkeeping has a little bit of a less in the market. The people feel like there's a less important role for the bookkeeper of bookkeeping, but I find it to be just the opposite. I find that bookkeeping is one of the most important aspects. It's the foundation. It's the foundation for basically everything, right? For both management reports, for the manager, for the owner to know what's going on in the business. If those books are not kept accurately, then the information is not going to be correct. So it's the bookkeeping as well as and that's also the foundation for management as well as for taxes, right? For filing taxes. So the bookkeeping aspect is very critical. It's very important. And it's an aspect that there can be some automation involved with it to kind of streamline things, but there's also going to be a good amount of discretion and decisions that have to be made depending on the nature and the specifics of different transactions, so that's so basically we provide the bookkeeping, we make sure we're staying compliant, and make sure the client is staying compliant in all ways and that they're aware of it, and then we follow that through all the way through the tax filing as well as through the tax projections and tax planning aspect of things. That's kind of a little niche area we've found.
Yeah, and as a client, I'll say again, legally, the client or as a relative of a client, I would say I appreciate that. The first time I referred you business, it was because the other CPA said, "Oh, we don't do bookkeeping. You have to do that, and then bring it to us, ready to go." And I'm like, "Well, that makes no sense to me. Uh, Find somebody to outsource it to at least, but why not have them integrated and connected?" And as a client, I'd say in the case where the finances were a bit of a mess, that the decedent, had really kept things in the last few months, and but you were able to access the bank account to get the bank statements or the downloads or however you want to handle it. So you have the data from which you can create the bookkeeping for us. And so I know I appreciate that as a client that you offer that service. So thanks. So
I'll say that, sorry, I'll say that it's not a bookkeeping aspect of things, because there's a lot involved in the bookkeeping as well. It's nice. I don't mind it if the client has the bookkeeping done somewhere else,
sure.
because it kind of it kind of just, not for myself, not taking the responsibility for that. It's a big responsibility to make sure those are accurate. So if the client already has somebody and they say, "Hey, you know what, we're confident with our books and we're coming to you, we'd like you to help us out with other aspects," that's great. That's sometimes it's even preferable, depending on the state of the books. But otherwise, most often clients need everything, need that aspect of it done as well. And so I just, I think, as you're mentioning, Bill, I think it's important, for myself to have that confidence in the books, to know what's going on in the nitty gritty, and so kind of taking that ownership and responsibility of it, and whether I have somebody here in the office do it, whether I might outsource it to somebody, but kind of taking the final ownership of it, and making sure that I understand and I'm confident in it. So when I do file it with the taxes, that I know that the client's going to be safe in what they're getting into, as well as myself.
So like me, you see, varied types of businesses and people, but you must see certain consistent patterns or certain consistent mistakes that you could say, wow, if I could help this person change their business, change their income, change their wealth, this seems to be a consistent pattern of challenge. What do you see as one or two things that a business owner, and let's talk about first small businesses like myself, I'm a real estate broker or real estate professional or investor. What's one or two things that you see someone to me that you'd say, wow, this is something that they can just get a handle on, will have tremendous impact for them in a positive way?
I think probably one of the biggest things for business owners, small business owners, and really, even medium sized, I would say, but is the realization and the understanding that just about every expense can be deductible, just about every expense. And so, I have to be careful when I'm saying that one, because I have to make sure that mentally I have the right mindset, because a lot has to do with a person's intention, right? So if a person, for example, if they host a meal at their house, right, or they host a meal in the office, they host a meal, let's say at their house even, and they just invite a couple of neighbors, then it's probably not going to be deductible, right? Let's say they have a party at their house, but if they throw a party at their house and they post about it online, right? And they are marketing their business with those photos or maybe some videos. And they, when they invite their friends, they have a little, or they invite the neighbors, they put a little, if it's an email or if it's a little flyer, they put a little blurb with their business name on it. Then they talk a little bit about business, talk about business when they're there. Or maybe one of the people that come, or a few people that come, maybe they're trying to pitch them or trying to, the potential clients. So as long as the person is having the mindset that they are trying to increase their business, then it's likely going to be able to deduct it. So it just really depends. So I think that a big mental shift for myself and for a lot of people that I work with and that I speak with is just kind of trying to, as we grow, as the business grows, as our income grows, we want to try to maximize those deductions. We want to try to maximize those business expenses. We have a lot of expenses, a lot of business expenses, and a lot of non-business expenses. So to the degree that we can, make sure that we know what the IRS requires and how an expense can qualify as a business expense, then that's the degree that we're going to be able to use that as a business deduction. It doesn't mean that a person can fake it, can pretend, can just after the fact say, oh, I'm going to pretend like we spoke about something. That's not what that means at all. It just means that that's why it's so important beforehand to educate oneself, be aware of what the IRS requires, what expenses they allow you, when and under what circumstances you're allowed to take certain expenses, and then just make your expenses fall in line with that. It's pretty it's a kind of a nice, simple sounding formula, but it's not doesn't always work out as easily as that. But that's kind of the I would say a big area, a big idea that I see a lot of.
Nice. So knowing the full breadth of expenses and being able to expense everything or more than you are now. Is there anything on the revenue side? Do you see any businesses consistently making the same mistake on the revenue side of the ledger, that they just miss opportunities for more profit, more income?
I think I'm in the same boat with that, right? And I think this brings us back around to the 10x mentality. I think the 10x mentality is really, you just have in mind that you're going to grow 10x, have goals be larger than you would normally think, 10 times larger. I think really huge, really big. And I think part of it has to do with kind of making a commitment first, committing first, and then figuring it out. So, like, for example, myself, right? Like, I'm going to have my rate of growth. I got this office over here. For me, I was not able to stay in my home office anymore. I had a couple of people that just started working with me, and so it just didn't have the space. I was not able to, didn't have the space for all of us. Actually, just today, as a side note, I just got a call from a young lady that we interviewed a few days ago, and she accepted the offer. So we're going to be hiring somebody. So really excited about that growth over there. But I think that, and it is that step right there, making a commitment and taking on an obligation to pay somebody else. It's a bit, it's a bit nerve-wracking, I guess, right? Because I'm taking the responsibility for paying somebody else's salary, paying somebody else, and not necessarily having all the capacity to fill all of her time just yet. So having that sort of, making that jump, making that leap and saying, hey, I'm going to hire somebody. I'm going to commit. I found a good person. I'm going to commit to hiring this person, and then it's going to free up some of my time, so I'll be able to work more on getting more clients. So it comes with the combination of having some confidence, a little bit of confidence in your skills and your ability, and just your having a little bit of trust and faith, even to going out there in the market and presenting yourself and bringing in, providing value to the market. I believe, and this is to your question earlier about when I left CNB, and I try to remind myself about this a lot, is just if and when we are committed to providing constant value, providing value to the marketplace, the market's going to respond, because people like to get more than they give. Everybody likes to get more than they give. So if I am able to give more than I'm getting, then the person sitting across from me is going to be, by nature, be receiving more than they're giving. So they're going to be appreciative of that. So they're going to be, and we can be giving different things. So it's not a zero sum. I can be getting more than I'm giving in different ways, and they can be getting more than they're giving. Right? I'm trying to give them as much value as possible. So I believe that, that it's really, giving, focusing on giving the value, on providing value. And I try to do that with my posts on Facebook, and every time I educate myself, I try to share that with people. And and then you get to connect with people also that way. But then that's really kind of taking that, having that courage a little bit to step out of your comfort zone and to make a commitment, and then kind of putting yourself in a corner a little bit, right? It kind of pushes you to perform, kind of like what Grant Cardone did and Stearns did when they went out from the undercover billionaire, right? When you force yourself to go, $100 in your pocket to go somewhere and make it work, then you're going to work really hard. You're going to work really hard. So that's kind of, I guess, what I would say on the revenue side, is just kind of, having, it's more of the mindset as opposed to, you know, something technical. But I feel like that's, for myself, that's something very important, something I'm trying to, you know, trying to implement in my life.
Great. So if somebody wants to follow you, how would they find you on Facebook or LinkedIn, or how would they reach out to you as well?
Yeah, I mean, so you can reach me, wandercpa.com. I'm on Facebook a lot. Michael Wander is my name. You can look up Wander CPA. You can shoot me an email, michael.wander@wandercpa.com. And yeah, you know, I'm on all the social medias, but Facebook, I would say, is the biggest one that I'm on. So yeah, love to connect to anybody.
Yeah, I see you regularly on that. I like following you as well. It's kind of, I had met you before you started doing a lot of it. It's been fun to follow you as you grow and develop your voice. So, well, great. Look, Michael Wander, CPA in Los Angeles, thank you so much for spending time today to share with people what they can do to improve to lower their taxes, increase their income, get financial advice. I know he's great. I referred one of my best clients to him, and she was thrilled with his service. I referred my own family entity to some degree to him. I don't know how to describe all that, but and I know I'm happy with him, and I know that my sister is happy with him. So thank you so much for being a great CPA. Thank you so much for being a great business member in our community. And for those who watch, thank you. And we do these interviews from time to time. There's a playlist of them. If you like this, like it. If you have comments, put in the comment section. I respond to all the comments on Facebook and YouTube and the other social media that this appears on. And again, I'm Bill Gross, the LAProbateExpert.com. Thank you so much, and make today your best day ever. Thank you so much.
Thank you, Bill. Nice to see you.